Hello, everyone, and welcome to the Master Series, your guide to intelligent production, brought to you by Entertainment Partners. I'm your host, Natalie Nelson. In the Master Series, we focus on important issues impacting the entertainment industry and its workers through in depth discussions with legal, tax, payroll, technology, and production experts. And today we are discussing best practices for year end payroll cleanup. And this will include some payroll pitfalls and how to avoid or correct them for a smooth transition into 2022. Two quick housekeeping items as we get started today. First is that we encourage you to post questions for us in the Q&A section of the Zoom call. You can do so by clicking the Q&A icon in the navigation menu, and we'll do our best to save time after our discussion to answer your questions. Also, please take 30 seconds to answer a short feedback survey following today's webinar. This will include the opportunity for you to give us feedback, as well as to suggest topics for future webinars. And your feedback is very important to us, so 30 seconds is all that we ask. Now let's meet today's guest panelist. Today, I am joined by Becky Harshberger, Vice President and Practice Leader of Payroll Tax here at Entertainment Partners. Becky is a true expert with 22 years of experience as a CPP. She is Vice President of the APA Board of Directors, member of the APA National Speakers Bureau, co-chair of the APA Government Affairs Subcommittee on IRS Issues, and she has recently begun co-chairing a new APA subcommittee on federal and state unemployment issues. Becky, welcome to you. Thank you for joining me this morning. How are you? It's so nice to see you.
Great. Good morning, everybody. It's good to be here.
It is. So, Becky, 2021 is shaping up to be one of the busiest and biggest production years that we have ever seen, and things are showing no sign of slowing down. And I know that one thing on everyone's mind is the fact that the industry is facing a serious labor shortage right now. And in addition to, crew positions that we're hearing about, this is also impacting the production finance office. They're short-staffed. We're hearing that people can't find experienced accountants. I know that you must be hearing this firsthand from clients.
So true. And everybody is just feeling overworked. It's just been a long, steady stream of overtime. Even here at EP, our paymasters are really feeling the volume. And unfortunately, when we see volume like this and we're all feeling short-staffed, we also see an increase in errors.
That's true. And it's obviously better to find the errors sooner than later, so we can correct them and we can make adjustments as needed.
Absolutely. Plus, who wants to spend the last 2 weeks of December cleaning up production, payroll, and accounting?
I would not. After this crazy year, I'm sure that everybody just wants to have a
everybody's done
transition, start it next year on a good note.
I think everybody should say skip Thanksgiving and go straight to the last 2 weeks of December at this point.
Exactly. Give me a break. All right. Well, let's start today's discussion on a high note. It's your favorite topic. Let's talk about the W-2.
I love seeing our W-2s posted in January and usually well before the 31st. But unfortunately, I hate hearing that a crew member has a W-2 that may have a mistake on it. Production workers, they expect a perfect W-2. And even if they never noticed that their paycheck stub had an error on it, because face it, nobody really looks at their paycheck stubs anymore.
That's true. And direct deposit, all of this, things just kind of happen seamlessly. You don't even think about it. I know I'm guilty. I probably don't check them very often, but it can be a little bit alarming, when you do check and you see an error, or when you get your W-2 and you see that something's wrong there. So when an error is detected, how do we handle that? What happens?
So if we have to correct a W-2, first, we'll usually first get a phone call from the production worker saying, hey, I think my W-2 is wrong. And at that point, we'll notify the production and verify what the crew member is telling us. Then we have to create and key an adjusting entry. We may need a new time card from the production in order to do that, because we always have to have that good paper trail. And then once we key the adjustment, the W2C gets created based on that adjustment. Now, W2Cs, they look weird. They're not like a copy of a W2 with a box mark corrected on it. They actually, this form on a W2C, all you correct on it is what was wrong. So there's a column for what was wrong and then what was right. So in order to file your 1040 or your state return, you need both the old incorrect W-2, because anything that's correct on it still stands. And then you also need that copy of the WC that just shows the correcting entries. So what happens is we say, yes, we're going to correct it. And then we send it out because it's not something that we can deliver electronically. And the crew member realizes they threw away the W-2 thinking that they were going to get a brand new one, not that they would need both forms to file. So the bottom line is when there's a W-2C involved, it's personal, it's emotional, especially if they're due a tax return, a tax refund.
Sure.
If they're due a tax refund, they're even more frustrated because they count on getting it quickly.
Yeah, I think we all do. And saying that, it's definitely better to find the errors now and make sure they're resolved. So there's no delays for that individual. They're not calling up the accounting office. They're not calling us.
Exactly. Trying to find someone in early January or early February, because that's when they'll notice it. Or even in April, when it gets closer to the April 15th deadline. We get a lot of phone calls then. That's when people really look at it and go, hey, something wrong here.
Yeah.
So yes, now is the time to look at all of your payroll for the year or for the production that you're on with a fresh pair of eyes. Look for negative numbers. If you've been filming in more than one location, make sure that all the payroll was keyed to the correct work state, especially if you're going for a film incentive. Know that if you do find an error, corrections take a little bit of time here at EP. Due to the volume at EP, we cut off adjustments on December 15th. So now is the time to kind of really comb through and find any mistakes and get those adjustments in. Now, after December 15th, yes, still send us adjustments. We're not going to guarantee we're going to have them done by December 31st, but we're going to try our best. If you get it in before December 15th, then for sure we're going to have it done by the time we cut that W-2. So if that adjustment is not processed before we cut off for W-2s, which this year is going to be, I think, December 28th, that means that we will key it, but the individual will get both a W-2 and a W-2C, and they won't get that W-2C until later in February.
Got it. So you mentioned the deadline, and obviously best case scenario, we want all the corrections to be submitted on time. But what happens if a production doesn't find out about an error until February, March, April, sometime later in 2022? What do we do then?
Yeah, the worst case scenario is always, in my opinion, the impact to the production worker, because if they've already filed their state and federal tax returns and then we find a correction, then sometimes they have to file an amended return, and they may incur a cost if they're using a CPA to file that amended return. Their tax refund may be delayed by that amended return. And there is a psychological impact to individuals. They fear amending their state and federal tax returns. There's a whole concept out there that increases the likelihood of an audit. It doesn't, but people feel that way, and I get it. And then the other aspect of this is on the production itself. If the production's going to has applied for an incentive, for a film incentive, and is counting on those withholding amounts to be correct, they may not get their full incentive that they budgeted for. They may be out of balance and end up frustrated as well because they realize, this payroll wasn't keyed in the right state, the withholding wasn't the right amount, whatever the issue might be.
I see.
Yeah.
All right. So this definitely could snowball and turn into something a little bit
Yeah.
bigger than just a delayed refund. And, Becky, you just mentioned incentives. And I want to take a moment to let everyone know that if you may have missed this, we recently did a webinar about payroll tax withholdings and how they affect incentives and your film's budget. So if you'd like to revisit that content, head over to the EP website. You can find the recording on the Master Series page. So it might be a good little additional piece to watch in addition to what we're doing today. Yeah. All right. So let's get back to payroll. So Becky, tell us, what are the most common pitfalls that you and the team are seeing lately?
Well, here in the production world, we love paper. We're slowly automating time cards, but if you're still using paper time cards and you're filming in more than one location, a lot of times you'll pre-fill out the time card. And if you grab from the wrong stack that's for a different state, those are the errors that we see, and someone's going to get taxed in the wrong work state, and they may not even notice it. The second thing that we see a lot of is more on the loan out side of it, and that's incentive state loan out withholding is usually on point at the beginning of a production. It's on the top of a mind. You see it, you're going to do it. But those loan outs that start mid-production, sometimes that loan out withholding is missed, especially if they're only there for a week or two. And both the production accountant and the EP paymaster are in the kind of everything is set up and moving really well zone. And darn it, the withholding is missed. So, and then they find it in post-production, and then we're chasing after it. And then the couple of other errors that we see, or frustrations, I don't know if they're necessarily errors, but that escrow or advanced money, maybe you forgot to withhold taxes. Maybe EP hasn't recorded it yet. And you're coming to us and saying, hey, can you record this on a 1099 NEC or a W-2? And if we didn't do the initial pay and there was no tax calculation done, but they need to be recorded, then that could require a gross up of those taxes, which is an expense to the production. And it could be late charges for pension health and welfare if pension health and welfare wasn't booked yet as well. Productions sometimes think that they can deposit payroll or loan out taxes on their own. And it's shocking the number of states that are like, oh no, you can't do it. Your payroll provider has to do it. So that's kind of a rude surprise as well.
I see. All right. Well, I just alarm going off in my head because you mentioned the 1099 NEC, and I'm going to do another shameless plug here. You actually did a master series with us last year at the end of the year, all about the 1099 NEC. So anybody who's watching, if you do have questions or you're like, what is that? You can always watch the recording of that as well. It's at the master series page on ep.com.
So those newer people to the industry might be saying, what's a 1099 NEC? I thought it was a 1099 miscellaneous. And an NEC stands for non-employee compensation. Mm-hmm. And it's actually a very old form that we used to use back in the 80s. And then to consolidate, the IRS added 1090 non-employee compensation onto a 1099 miscellaneous to streamline reporting, and it was always reported on box 7 there. But now there's a different due date for non-employee compensation and all the other things that are reported on a 1099 miscellaneous. So the new old form came back last year, and that's what we give loan outs now, 1099 NEC.
Oh, perfect. Well, thank you for that explanation. All right. So let's get back to our pitfalls. You gave us quite a list. There's a lot to be watching out for. So, what advice do we have? How can productions avoid these issues?
I think first and foremost, be curious. And ask everybody else to be curious as well. Tell them to take a look at their check stub. Is all the personally identifying information correct? PII. Did they really live in that state where it shows lived state? Did they really work in the states where you see the withholding? Did they pay local taxes? Should they have paid local taxes? So, secondly, I would say get into the habit of checking everything, every little detail twice. And I know when we're slammed and we're short staffed, that's hard to do, but that's how you get to as correct as we're going to get to. Tell loan out owners and crew members what is required for the film incentive, and that it's really important that the production that's going for the film incentive gets that film incentive withholding correct. They should verify that each paycheck is correct, just as a third pair of eyes on the payroll. And tell the whole production, hey, if you see something funky, say something, bring it on. No question is a dumb question. They can always call payment support at Entertainment Partners or payment support at ep.com with their question. And that leads me to the last thing, partner with EP. And I know everybody does, but when you get an edit back from us, really review it every time. If you've asked us to fix things on an edit, then check and make sure that we actually did key exactly what you wanted us to key, and make sure that second edit is exactly what you expected to see.
Yeah. All of this, it kind of brings the phrase, it takes a village to mind.
Yeah.
And, everybody's human, mistakes happen, but it's all of us looking out for each other and making sure that we're getting all those sets of eyes, so the burden doesn't fall entirely on one person or one department. So when it comes to the production, so the burden doesn't fall just on the accounting office, how can the crew help, for example?
Yeah, I know the crew, and I think everybody that gets a paycheck thinks the same thing. They think, "Oh, somebody just pushes a button and my paycheck comes out." But it's not the case, as we know in the EDP for sure. So it's such a great question. How can crew help? We forget that they can help. Encourage your crew to sign up for myep.com. They can run their own payroll reports at myep.com and check for anomalies. Yes, you heard me right. I am not here to tell you that production accountants and finance people, that all of this checking and double checking is on your shoulders. I know that it's really hard when you're short staffed, but really encourage your crew to get out there on myep.com, take a look at their totals on their last check stub, and really check and see, even for productions in the past, to make sure that everything was done properly. Hey, by the way, you all listening today are going to be really shocked by this number. Natalie, how many people have signed up for myep.com?
The number is amazing. We have 140,000 people who have actively signed up at my.ep.com. And this includes crew in the US and in Canada. It's not centrally located in one place. And, we're seeing an average of about 50,000 people logging in each week. So that's a huge number of people who are being proactive. They're taking charge of their information. They're checking their pay. And, it's really saving a lot of headache for the accounting office, gotta say.
And out on the, isn't there a how to log in and how to for myep.com out on our website?
Yes, there are instructions, and it's really simple, very user-friendly. So, head over to our site and you can find a lot of resources that will help you in case you haven't signed up.
Or you want your crew to sign up.
Or you want to encourage the crew to sign up. Sorry. Yeah. All right. So what else should our production accountants be looking at this time of year going into the end of the year?
Yeah, why not? Why not clean up everything? Why just clean up payroll? So first thing I would say is take a look at your holiday and vacation accruals. Do you need to pay them out? Vacation fringe is paid on a weekly basis unless you are someone that has elected to pay it at the end of a production. The vacation fringe should be paid out whenever the employee receives a payroll payment, and the holiday fringe should be paid out on or after March 15th of the following calendar year in which the holiday pay was accrued. Normally, the production prefers to pay out the accrued holiday balance at the end of the production instead of waiting for March 15th of the following year. So depending on what your production has decided to do, take a look at holiday accruals and then prep if you're going to be paying them out before the end of the year.
All right. Good advice. And aside from the payroll issues that we've been discussing, are there anything else tax related that the production accountants should be thinking about right now?
Yeah, a couple of things come to mind, especially when we just mentioned 1099s. So the production's going to be creating their own 1099s for their vendors. So you want to check your bank reconciliations. Are they really done? Are any check payments outstanding? Anything that should have been canceled when a check was reissued? I know a lot of payments are automated, but just double check your bank recs. Are you really ready to issue your 1099s to your vendors? Do you have all the information that you need to do that? If you're using our products, make sure that you're using the new tax code adjustment, the tax code 01N instead of the old tax code 07 for 1099 miscellaneous. If you have been using 07, give a call to product support. They can show you how to make that change on your system so that you're ready for 1099s.
All right, perfect. And what about something that's not tax related? Is there anything else that we should be thinking about right now?
Oh, yeah. Let's clean up that balance sheet. Do you have deposits out with vendors like EP? Look at the balance sheet and see if you can start the ball rolling on finalizing deposits with EP and with other vendors. Let me think. Another item is confirm your adjustment cutoff if you are a production that rolls up to a corporate office. And if you do roll up to a corporate office, check and see if they want you to close for this accounting period on a date other than the normal date because it's the end of the year. So you should start having those conversations now while it's easy to catch somebody at your corporate office.
Exactly, because the year does kind of wind down. Everybody's thinking about other things. So definitely take that step now. All right, Becky. Well, thank you. We have covered a lot of ground so far. So let's just pause for a moment and let's give our audience a little recap of the best practices that they need to remember.
So I'm not going to put it all on the shoulders of the production accounting world and the production payroll world. Ensure your crew knows what's required for the film incentive. If you're filming in an incentive state, ask them to check their paychecks weekly. If multiple work states are involved, ask them to go out on myep.com and really take a look so that they get that perfect W-2. Partner with EP on payroll edits. Take an extra 10 minutes. That extra 10 minutes can make a huge difference as we head toward the end of the year. Pre-plan for any loan outs that start mid-production. That's where we see, frankly, that is where we see the most loan out withholding errors. 2 weeks before production ends, do a quick audit. Can we fix anything? It's very easy for us to fix things that are missed if the crew and the actors are still working. The other thing I would advise is starting a year-end checklist with all the items we've talked about today. Don't worry if you didn't take notes. This webinar will be posted also on ep.com under news and info and in the Masters Series section.
Absolutely.
So you can always go back and listen again.
Yep. And I love the start a year-end checklist because it's rolling into the end of the year. Start your checklist, check it twice. All right. Well, we have our best practices and obviously we would love them to be happening during production. That would be everybody's ideal in a perfect world. But we all know that things get overlooked and things happen. Yeah. And honestly, it's not over until post-production says so, until they tie everything up. So what should we do if we find an error when we've moved into post already?
So call EP as soon as you find the error. Call your paymaster, call tax support. You can even call me. I'll help out. And just if you did miss loan out withholding, EP can help by actually talking to the actor's CPA. They much prefer that EP performs the withholding deposits And we have a tremendous success in collecting missed taxes. So just know that, worst case scenario, we are going to help you. And once the taxes are deposited, there may be penalties and interest for late payment. We're very successful at getting those abated, but not 100%. So just know there may be a little pain there, but far better to get the full amount of the incentive than to forego it, because of a missed withholding.
Absolutely. All right. Well, thank you. Before we wrap up, we did get a couple of questions, so I just want to take a look at our Q&A and make sure that we can address some of these. So one of our viewers wrote in and said, "What about adjustments for the ASA rate adjustments that are now being voted on?" Do you know anything about that?
Oh, yeah. Yes, we will be helping productions with I think you're referring to retro pay. So yes, there will be, and we have a full process for retro pay. So we will be able to help a production with the retro pay.
All right, perfect. Yeah. All right. So a couple of other questions came in that are slightly off topic, but still useful information. So one of our viewers wrote in and said, "How can I maximize my deductions if I've already paid enough taxes for the year? The new W-4 is confusing."
God, isn't it funny? The new W-4 is out there and we're all still afraid of it. And me too. And I'm a tax expert. So I love this question. So I'm going to give you a very specific answer for this question. And I'm turning a little bit away from the camera because I actually have the W-4 pulled up on my other screen. So if you're looking at the new viciously, difficult W-4, you're going to see in step three, I would put a minus sign on step 3. Step 3 decreases your withholding. So the number that you put in step 3 reduces the withholding that you're going to see. And also step 4, B as in Becky, also reduces your withholding. So that is an option to kind of make those numbers bigger if you've already met the majority of your withholding obligation. So the other thing I'm going to tell you, and I know you're thinking in your head when I say this that I'm a crazy lady, but the IRS has a tax withholding estimator, and I'm going to put the URL in our chat, and let me see. I'm going to just put it. I hope I can put it in there. Oh, maybe I can't. Shoot.
You know what? We'll get it posted.
I don't think I can. Okay, we'll get it posted.
We'll get it posted.
So you can go out onto the IRS website and have a recent check stub and have last year's 1040 before you even go on the website. And you can use their estimator. And at the end of the estimator, it will tell you exactly what to put in those boxes on your W-4. And then just remember that come January the 1st, fill out a new W-4 for the year. Don't leave those numbers in there for the 2022 tax year. So those are 2 ways that you can reduce your withholding for the rest of the year. Put a larger number in box 3 and a larger number in box 4B as in Becky. And then secondly, you can go to, I've got a third idea too. You can go to the IRS tax withholding estimator and put in all your information. And then the third thing you can do is you can go to a website, which I just love, called paycheckcity.com. paycheckcity.com. And you can input information from your current check stub and play on that website. You can play with box 3 and box 4B to see what your withholding roughly would be on your next paycheck if you made those moves for your W-4. Perfect. So hopefully any one of those 3 options will be a good one for you.
All right. And I know that we also wrote a blog post about this on
Yes, we
the
did.
EP
Yeah.
blog, and it talks all about how to adjust your withholdings. And I believe you even have a markup of the W
Yes.
4, and there are some little kind of
With my tips and
tooltips.
tricks.
Yes, your tips and tricks that
Yes.
say, use this box. This is how it's going to help you. This is what's going to happen. So, so everybody watching, head over to the EP blog and you'll be able to find that post, and that will definitely help.
Yes.
Okay. So, our next question is, how do you handle payroll for a show that travels? We are going to be in 10 to 14 different states for my series.
So you're going to not be working from home in your spare bedroom. That's awesome. I'm jealous. You're getting out and about. So this is a great question. Withholding taxes are required where you physically work. So as you go from state to state, you're going to see your withholding taxes change to that state. So if you're a resident of California or New York, we are considered high tax states. So you may go to work, and we'll just call it New Mexico. You may go to New Mexico, and New Mexico is a lower tax state. So you'll see on your paycheck stub that for the time that you're in New Mexico, you'll see New Mexico withholding, and let's call it $350. And then you'll see California withholding, because you're a California resident, of $150, where normally you would see $500 going to California if you just worked and lived in California. So as you go from state to state, we are going to withhold. Let's say your next state is Arizona. Now you're going to see Arizona withholding, and then that little catch up for California. If you go to New York, you may just see New York withholding and nothing in California, because they're pretty equal. And so the paycheck itself, your net, should not change that much. But what this means at the end of the day is, at the end of 2022, you're going to get a W-2 from every state where you had withholding. And the reason I say that is, there's a bunch of states out there you could go to with no withholding. Texas, Florida, no withholding. So you will not get a W-2 for those states, but full California, full resident state taxes, California, New York, wherever, Georgia, wherever you're a resident, will be taken when you work in a state that does not have withholding. So the harsh part is, if you do work next year, or even if you have worked this year in 10 to 14 states, I think the person asked about, then you're going to get those W-2s from all these different states. What you're going to do you're going to have to file a non-resident return in all of the states that we gave you a W-2 for. So in those states, non-resident return. In your resident state, you're going to take credit for all the taxes paid in those working states, so that you don't double pay taxes in your resident state. So it's kind of a long answer. It's a great question. And Natalie and I were talking earlier today about this question, and we thought, you know what? In 2022, we should do a master series on this and do a little bit of a deeper dive. So thank you so much for asking and sparking us for a new topic.
Yes, thank you to the audience. Okay, this is going to be our last one. And this is kind of going back to the 1099. Someone wrote in and asked, I was wondering, for third-party vendors, which 1099 should I select? Thank you.
Oh, man. This is Stump the Tax Geek.
Oh.
This has turned into a game of so for the most part, with a vendor, you're going to use the miscellaneous, except if they performed personal services. And that's why I said that 1099 NEC, NEC stands for non-employee comp. So it's actually for services performed, and that's the loan outside of our business. So for vendors where you've bought items, then you're going to use that 1099 miscellaneous. Box rentals still go from entertainment partners, if we've paid them, still go on that miscellaneous under rentals. I think it's box 2 on the 1099 miscellaneous.
Okay. All right. Well, thank you. Hopefully, we didn't stump you too much. All right, Becky. Well, thank you. And thank you to everyone who submitted questions. We got some great questions
Yeah, we
today.
did.
All right. Well, I know that I'm excited for all the new content that's coming, everything that's on its way to my TV, to the big screen, now that the theaters are open again. So we have a lot to look forward to.
Yep. And before we relax, let's get a perfect W-2 and 1099 out there.
Yep. Let's make sure everything gets pretty little bow on it.
Yep.
And EP is your partner, and we can help you along the way. So certainly, as we've said before, reach out to us if you have any questions. And now that we have taken a look at wrapping up this year, let's take a look at going into the future. And I'm actually going to bring up my slides again because we want to let everyone know that we have a webinar coming up on December 9th, and this is looking into 2022. And we're going to be talking about budgeting for 2022. So we encourage everyone to join us for that. And I know, Becky, you're going to be leading this one as well, correct?
Yep.
All
We're
right.
going to talk about COVID-19 and the impact that all the state borrowing for unemployment funds are going to have on state and federal unemployment rates. And we'll have some other budgeting items for you as well. So hope you all tune into that one too.
All right. Well, thank you. I'm excited. I will be joining you. So hopefully everyone can come and visit with us on the 9th. And to everyone who joined us today, if you'd like to revisit today's webinar, along with the complete library of Master Series, you can do so. We did mention a couple times that we have all of our recordings on the Master Series page of the website. So that is ep.com/master series. We have over 50 episodes available on demand anytime for your viewing. And we also encourage you to visit my.ep.com. We also talked about this a couple times today. This is a really useful tool, and we would love it if you would share with your crew, with all the production personnel, so they can easily manage and update their personal profiling and their mailing information. It is also where they can review the last 3 years of their EP pay information. They can compare week over week changes to their checks if anything's changed, and they can really be informed and in control of their pay and their personal information. And my.ep.com is also where you can access our e-learning academy. This is something that we want to really promote to everyone because we have over a dozen courses available, including professional tracks, including production accounting courses. We have Production Accounting 101 and 201 for anyone who'd like to get into production accounting or maybe wants to brush up on those skills. So join the 100,000 plus people who have already signed up for my.ep.com and take advantage of those resources today. A special thank you to my co-panelists today, Becky Harshberger. It was wonderful to have her join me. And thank you to our audience for tuning in. We hope that you all walk away with some great information and that you stay safe and healthy. And we look forward to seeing you at our next Master Series.